Welcome to NorthStar. Consider the following data for a company for the month just ended. Sales 4 million, gross profit margin based on sales is 25%. Decrease in inventory $160,000 and decrease in accounts payable for inventories is also given as $275,000. We need to find out the estimated cash disbursement for inventories were. So question looks simple, it is little tricky. Let's calculate. We know the sales value. How much? It is $4 million. And gross profit is also given. It is 25%. So how much is the cost of goods sold? Cost of goods sold would be 4 million minus 25% or $3 million. This is the cost of goods sold. Further, the question says decrease in inventory is 160,000. So let's just write what is the decrease in inventory. So inventory has decreased by $160,000. Means whatever we have sold, if exactly same was purchased, there would have been no change in the inventory level. For example, my inventory was 200,000 units or $200,000. If whatever we have purchased, same thing has been sold, then opening inventory and closing inventory will exactly tally. But here, closing inventory has fallen by $160,000. Means I have purchased less $160,000. If you have not understood, I will just take smaller numbers. Suppose my opening inventory was 10 units and closing inventory is also 10 units. Then I have purchased 100 and I have sold also 100. But if my opening is 10 and closing inventory is 8 units, means I have sold 100 and out of 100, 2 I have sold from the existing inventory. In other words, out of 100 units which has been sold, we had purchased only 98 units and 2 units we have taken from stock. In that case, it will be 10 and it will be 8. Alright, if you have understood this, very good. It will be easy for us to understand this question. So how much is the decrease in inventory during the period? 160,000 has decreased. Means whatever we have sold during the year, 160,000 less inventory we had purchased during the period. You may ask me, why are we calculating how much is purchased? Because we need to know how much cash we have paid. To find out how much cash we have paid, first we need to find out how much purchases we had done. So, how much is the purchase? 3 million minus 160,000. We get $2,840,000. This is the total purchases that we have done. And we should have ideally paid this much money only. Let's look further. Decrease in the accounts payable for inventories is $275,000. Means decrease in accounts payable, my old accounts payable was there and that has decreased by 275,000. Means we must have paid this money. Remember, if my accounts payable was 10,000, now also it is 10,000, we have not paid anything. If it was 10,000, now it is 6,000. Means we have paid 4,000 during the period. If you understood this, let's understand this again. Decrease in accounts payable for inventory is 275,000. Means whatever was the accounts payable during the year, it is short or it has fallen or it has reduced by 275,000. How can it reduce? We must have paid this money during the period. So how much more we must have paid in addition to this? $275,000 more we must have paid towards the accounts payable. So how much is total paid? $2,840,000 plus 275,000. We get $3,115,000. So the correct answer would be option C, $3,115,000. Thank you.